Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the closing action on the D Street. It's a 51 point of an uptick on the Nifty right now. You can see 25,453. Although the markets have been, lackluster on this Friday, you can actually see some of the pockets that are still holding up in trade. On the Nifty, we've come to the day's high point, but we still remain below the 25,500 odd mark. On the Nifty, Bajaj Finance remains as the top mover. Dr. Reddy's and Infosys, also Wipro have pulled up, which means the IT stocks have started to gain momentum in the second half of trading action and they pulled up again. From the banks and the financial services spaces, the NBFC names that are hovering higher. Oil and gas, pharma, real estate, these are the other pockets that are also holding up. But metals, auto, those are the two pockets that have slipped in the trade today. PSU stocks are also half odd percent higher, led by the OMCs today. You also have the defense names that are in focus. Railways, some of them are also pointing to gains at this point in time as well. And within the broadest index, you have some names that are continuing to be, the front runners. Look at PC Jeweler, for instance, an 18.5% kind of a move today. Parsvanath Developers from real estate is also up in double digits. Eamco Elecon is up. JG Chemicals is up in trade. Surya Lakshmi Cotton Mills is higher in trade. SML Isuzu is another one that's also continuously on the move. Look at Paras Defense, Imami Paper Mills, JK Paper. So some paper stocks also coming back into focus. West Coast Paper is another one that's also on the move. We will also definitely ask our guest on the paper move that we are seeing right now. Chennai Petroleum is another one. McLeod Russell. These are some of the names in the broadest index that are definitely holding up in trade. Let's in fact welcome our guest on board. Mr. Abhishek Basumallick joins in on the program with us. He's the co-founder and the fund manager of Sri Rama Managers PMS. Warm welcome to you, Abhishek sir. Thank you so much for taking the time out. I want to start off not just with the market outlook that we usually do, but today's big news that all of us woke up to finding out was Jane Street and how SEBI, put its radar on Jane Street, confiscated, impounded some of their assets, froze their accounts. Around 4,800 crore rupees of funds have been frozen. Of course, we've been reading as to how was the modus operandi, utilized by Jane Street by taking opposite positions in cash and F&O markets to make some profits, which SEBI marks as unlawful or illegal. Of course, Jane Street has also come out with its own statements talking about as to how they will be looking at dealing with the regulator, and they are confident of all the compliances that they have to mark. But I just wanted to understand from you, from the retail investor's perspective, something like this which has come to light now after months or maybe a year and a half of looking at scenarios being changed. How should a retail investor really read into this? Of course, it was out of hands to really find out whether something like this was in the works. Also, on the other hand, taking opposite positions in the markets is also not illegal. So how does SEBI really try to, convince Jane Street or the legal authorities that what modus operandi Jane Street used was actually illegal? That's something that we want to know, because there will be so many other hedge funds that will be doing the same things.
So, first of all, good afternoon to you and your viewers. I think you've sort of hit the nail on the head. I mean, I just glanced through, the modus operandi. I'm I'm not an expert in FNO and this high frequency kind of trading, but I think one of the bigger challenges is probably the scale at which Jane Street was operating, because I'm sort of convinced that what they are doing is being done by many others of much smaller scale,
Yeah.
and that is not sort of coming, that is not creating issues. I think what was the challenge here was the scale with which they were operating, and that was creating, I think, very large volatility on expiry days.
Yes.
Some of my friends who are FNO traders, they used to tell me that the expiry days was just sort of crazy in terms of volatility, and I think that is where the regulator decided to step in. Uh, on the other hand, I think Jane Street will also, I think they've already indicated that they will pursue legal options. And I'm not convinced that we've heard the last of this. This is just, I think, the beginning or the initial salvo in something that we as bystanders would be very interested to see. I mean, this is like a very interesting story, thriller kind of a plot getting played out. So we'll see from the sidelines how this plays out.
So, Mr. Basu Malik, just to understand a wider implication, so Jane Street has been banned till the time there are legal proceedings that will be on, a final order will be issued. Till that time, just because you also marked out that the scale at which they were invested in into the stock markets and the volumes with which that they were dealing were massive, so much so to really cause fluctuations on the expiry days, particularly. In the absence, what is the implication for the markets as a whole?
I don't see that, there's obviously there'll be lesser volumes. So from a FNO expiry perspective, I think it'll be less volatile. The implications on the on the overall on the equity markets is that the exchanges, BSC, NSE is not yet listed, but the likelihood of volumes going down, and FNO is where the exchanges actually make the bulk of the money.
Yes.
So that is going to be impacted. There are brokers, there are the entire space that a firm like Jane Street would use. Uh, you know, those space will get impacted. But I think on a broader scale, I they are traders, right? And especially they are very short-term traders. So uh, removing a very short-term trader for the system only sort of
Yeah.
takes away some amount of liquidity from the system. But other than that, I don't think there is any medium to long-term impact.
Not any medium to long term impact. Of course, like you pointed out, sir, that this is just the beginning, and we will be, of course, getting to know a whole host of developments as it progresses from here. But for now, what we do see is that probably this could lead to some surveillance measures being strengthened to find out that Jane Street 2.0 or something like this does not damage, or impact the retail investors, the smaller investors with such, manipulative strategies. But very, very difficult to say when you have such strong algorithms, quant strategies at play. How much will you be able to compete in such stances as well? So that's something that we will definitely continue to understand better as things progress. Coming back to the overall markets, of course, two big triggers that we are watching out for. One, a deal with US as far as tariffs are concerned. Monday is July 7th, and just 2 days hence, we will have July 9th, the absolute deadline for the reciprocal tariffs. So far, there is no deal done yet with India. We have also heard from Donald Trump saying that, the country is going to be sending out letters to about 10, 12 other countries, and those countries will have to start paying tariffs starting 1st of August. Those are the statements that have already come in. So, which also gives us an indication that only a few countries would be lucky with a deal that's in place. The others will have to face higher tariffs. Now, whether it will be the initial tariffs that were talked about for those countries is something again that will come out in the details as well. The second big trigger will be the earnings season that we will be watching out for from next week onwards. How are you looking at two big triggers now impacting the momentum that we are seeing in the markets?
See, I think tariffs is going to be an uncertain event, right? I mean, it's very difficult to call out what will happen because there is continuous news flow on that front. I think yesterday also there was some, news which says that India will have at least a mini trade deal. I have no clue what a mini trade deal means, but in all likelihood, India is going to probably, I mean, from my understanding, is going to have something in place and with the option of a much more broader, more nuanced trade deal, part two coming up later. So maybe just before the deadline or just after the deadline, etc. Right? That's personally, I think, what is most likely scenario. The other very interesting, observation that I'm making is that if you look at the bigger countries, right, the bigger trading partners of the US, whether it is China, whether it is Japan, other large European countries. Nobody is really very, you know, nobody's pressing the panic button. Nobody's sort of dying to get a deal. Uh, and I think one reason for that is China has actually shown that standing up to the US president actually may not be a very bad idea, right? Because it's like both sides have something to lose. It's not that US putting tariffs on a country like on any country like India, China, etc. It's going to have hardships in the US also if they go ahead and do it. So I'm sort of not very sure how this will play out, but this is something which is going to be slightly disruptive or uncertain for the markets, at least in the very short term, till we get to hear some kind of a concrete news flow. I think the markets will remain cautious and jittery.
Okay. From the earnings season, Mr. Basu Malik, are you betting big on any key sectors that you believe could be outperformers?
I don't think so. I think this quarter is also probably going to be slightly not blockbuster. It'll probably be better than last quarter. At least that's the expectation. But my guess is that second quarter, I mean the second half of the year is likely to get better. Maybe third, maybe fourth quarter onwards, we'll start seeing results of the capex that the government is starting to push through, and the defense procurement, etc. So it will take some time to sort of pass through to the companies.
Okay, got that. Okay, Mr. Basparik, I'll ask you on a few sectors that that are in the buzz today. One is the paper stocks among the small ones that I was just marking. I think it's the first day of momentum that we are seeing. It's been off the site for a long time. Any key reason why you spot this paper names coming back into flavor, and will this sustain?
No, I'm not very sure if this will sustain. I think there's some, supply constraint that I was reading about, but I'm not very sure, if this is a sustainable trend. What I've seen over the last few years is, paper moves tend to be very sharp, very short, but I don't have much of an idea in terms of how it will play out over even the short to medium term.
Okay, fair point. Now, apart from this, we're also looking at some moves across a few other sectors again. Real estate is another one that's picking up pace. How are you approaching this one, sir? Do you like any few sector stocks within this basket?
See, I think real estate should do well. I mean, interest rates have come off. People have more disposable income right now because tax rates have come off to an extent. Uh, so if I consider both these two, uh, there should be a pickup in real estate. The challenge is that if I look at the listed real estate players, most of them are actually playing the premium and the ultra premium market, and that is not where the bigger play in terms of tax benefits, etc., is going to be. Right, it's probably more in the affordable housing sector is where that play will be. But demand at the top end of the segment is extremely strong. Like we've seen news flow from DLF and pretty much everyone who launch a very premium housing, and it sort of 1 day, 2 day, 3 days it gets sold off. Uh, I think you know the companies that it's coming up. I think Brigade, Prestige, DLF, Shobha, uh, Ulte Patil. Most of them have good inventory. They're doing good work. So most of and geographically dispersed. I think most of them should do well.
Okay. Another sector that's gaining some more interest is the oil and gas sector, sir. Especially after the calm down that we saw between Iran and Israel and the ceasefire, oil prices have been coming down. There are some analysts who expect even 55 to $60 a barrel that we could be seeing, which means another $5 6 kind of drop from where we are at. OMCs are the ones that are definitely up and about right now. Is it still the right time to go ahead for an IOC or an HPCL, BPCL, or do you think most of the good news is already done?
How, I mean, no idea, because tomorrow morning some wars and something will start somewhere, and oil will either go up or come down. Uh, very difficult to figure this out.
Okay, but what's your overall stance on the oil and gas names? How do you deal with this one?
See, I think longer term, if I have a slightly longer term view, uh, there is a definite mega trend of moving away from fossil fuels to renewables, and that is happening. Now, while that is happening, you know, uh, there is a push now from the US for the traditional fossil fuel. So I don't see that oil price will sort of go completely either, a lot up or a lot down. It's going to be range bound. Very difficult unless you are a short term trader. It will be difficult to very play the. You should be, if you're a short term trader, you can play the swings in this. But as an investor, I think it's going to be difficult uh, to make money in a sector which is not doing much.
Okay, got that. Talk to us about the IT sector, sir. That will be the first one to come up with the earnings. You did say that overall you're not very excited about the earnings quarter this time around. It could be rather, probably just meet expectations kind of a situation. How would you really look at IT sector?
I think IT services is still, sort of under significant amount of pressure. If you look at the management commentary, in different interviews that I, listen to, uh, there's very little clarity from the client side of these IT companies in US, in Europe, in terms of overall spending, in terms of how AI is going to change the landscape, etc. So right now, I think IT services companies themselves are not very clear in terms of the pipeline, in terms of the kind of projects that they will get. So obviously, it's a bit murky. On the other, I mean, the counter side to that story is that the stocks have not done anything much in the last, I think, 6 months, 1 year. So valuations are probably more on the reasonable side, and IT right now is probably to be considered more as a defensive than a growth sector. So that's the way I think we have to look at it. So IT is probably the new FMCG kind of a sector. Where you
Okay,
will get
got
10,
it.
12% growth,
Yeah.
dividends, but you cannot probably get back to that 25% growth that we had a decade earlier.
Absolutely, and that's going to be a tough one for sure. What about pharma, sir? The other export-oriented sector that we should be looking at. A lot is happening again today. Also, there are some stocks which are on the bus. How are you looking at the pharma story?
I think pharma is a very interesting space. I think we will be coming out with a report very soon, where we are talking about the patent cliff. So the number of patents that are of blockbuster drugs that are expiring in the next 2 to 3 years, and that is very large. So the opportunity size for the Indian players uh, across the value spectrum, whether they are in CDMO, whether they are actually in the formulations, export, domestic. The entire space looks very interesting. Uh, some of the valuations may be a little bit stretched, but you have to take a company by company call. And also the other factor that we are seeing is we are starting to see biologicals pick up. So that's another very interesting space. It's completely different from the traditional chemical based pharma that we are all used to. So again, that's another long-term theme that we are looking at. So again, overall, very very interesting space to look at.
Fair point. I hope this has also helped a lot of our viewers really form strategies on these key sectors. Looking at the defense space yet again, today again there was an announcement right in the morning that defense ministry is again looking at 1 lakh crore rupees worth of acquisitions that they have approved, which means more order flow coming in for the entire defense pack, something that keeps these stocks in momentum, keep them going. What is the suggestion that you would have on the defense stocks right now?
So, like I said last week, I think we have to be now more cautious. I was cautious last week. I think now we need to be more cautious because, see, typically defense is a very, very lumpy sector, right? You get orders uh, all of a sudden, and then it will dry out for a long time. So the moment you see, not global geopolitical tensions slightly go down, a lot of this euphoria is going to go down, and then you are left with stocks where valuations are extremely overstretched, and where the revenue recognition is going to happen over many years, right? So these orders that people are getting, it's not that a 100 rupee order is going to get delivered immediately. Some of these orders are going to get delivered over 2 years, 3 years, 5 years, 10 years, right? So uh, although the number looks large upfront, if you look at the annual contribution, they may not be that significant, right? So the market is pricing everything in at the beginning right now, but the revenue recognition is going to take longer. So we need to be very cautious right now with defense, in my opinion, at least for the short term, definitely.
Okay, got that. What about railways, sir? How would you, where would you put railways in the scheme of things?
So railways is exactly where defense was 6 months back. It's a sector which had gone up, then sort of consolidated. It's now slightly off radar
Yeah.
for most of the most momentum investors. But if you really look at what is happening, is that the government continues to spend significantly on railways, whether it is track modernization, whether it is
Yes.
covered systems, whether it is new coaches or metros. So there is continuous thrust in railways, and uh, stocks. A lot of these stocks have done not mu- done they haven't done much in the last 6 7 months. So the likelihood that railways will, the railway stocks will pick up is probably high.
Okay, so that's the railway space. One more interesting space that I want to discuss with you is the QSR space. It's been a while since I discussed this one with you. The trigger today was news reports, media reports not confirmed by us on Business Today, but indicated that Sapphire Foods could be looking to merge with, Devyani International. That's what Yum Brands, the operator of KFC, Pizza Hut chains, is actually looking as a strategy to perhaps come out of the slowing momentum or the growth in the space right now. Sapphire Foods in itself, as a response to these news reports, has suggested that they wish to inform that the company evaluates various strategic opportunities in the ordinary course for growth and expansion of businesses, adding that there is no material event that requires a disclosure at this immediate moment. But the stocks had fired up right in the morning. They've come off from the day's high point, both of them, Devyani and Sapphire. How are you looking at this space? Do you think the space looks for a lot of mergers and acquisition opportunities that could come in? And what would that mean for somebody who wants to go big on the food business?
So there are two conflicting trends that are going to shape up in India in the next, say, 3 to 5 years. And let me spend maybe a little bit of time to explain. So the first is that we have a young, demography. So lot and young and earning, increasing earnings. So there is the propensity for such demography to consume more of fast food, right? That has been the global trend. So it's not surprising when and also now with the Swiggy, Zomatos of the world,
For sure.
uh, where you have very quick delivery. So that is one side of the business where there could be a demand pickup or a growth in demand because of the demography being young and affluent. The other counter trend to this, and this is what is being seen globally, especially in the US, is after this semaglutide, has picked up with, GLP-1 injections, and India, we are just seeing official approvals coming through. We've seen Mounjaro, we've seen Wegovy,
Yes.
and within probably the next 6 to 8 months, we will see generic versions coming into India, uh, where probably the pricing will be half of, or significantly lower than what 17, 18,000 a month for the current ones that are available. India is a country where we have a lot of diabetics, we're the diabetic capital of the world, we have a
Yes.
lot of obese people. So once and if this picks up, right? If this picks up, then we will have a possibility that we have a significant drop in consumption of fast food. And that is the trend that we've seen globally. Now, if that plays out, then I'm not very sure how, if these companies will be able to expand their margins or will be able to continue growing the way they are. So, two conflicting signals. We'll have to see which one sort of does better. But I will be very, very cautious and skeptical about fast food, about soft drinks, about sugary food right now, because there is this global trend which is actually which is going to work as a headwind for these sectors.
Okay, fair point. Towards the end, coming to one of the largest spaces, NBFCs, that's been in news. We've seen Bajaj Finance come out with its Q1 business update. A lot of other banks also reporting their business updates as well. And of course, earnings will be the key trigger that we'll be looking out for. We've seen an IPO of HDB Financial come in this week as well. So the entire NBFC space is in clear focus. How are you approaching this one? Any key stocks that you could highlight which you are betting big on, sir?
I think very very positive on overall banks, financials,
Yeah.
NBFCs, MFIs. I think the large part of the pain that we saw, especially in the MFI sector, is over. NBFCs, I think credit growth has started picking up, inflation is coming down, rates have come down. So overall, I think this is a very good sector to be in. Uh, uh, I mean, I like the entire space, to be honest.
Like the entire space. All right. Okay, Mr. Basumallick, thank you so much for being with us today. And again, throwing a lot of light on all these sectors that we have discussed. Always a pleasure to host you. Thank you so much. Alright, viewers, we'll start to wrap up. A minute to go before we shut shop. 60 points high in trade, not too bad because we had a lot of choppiness throughout the course of the day. We have managed to come up back again after testing 25,400 in the middle of the day, and we have now climbed to the day's high point, 25,467, a quarter percent higher in trade. Let me just also pull up the index contributors for you. Meanwhile, I'll just mark out the top gainers. Bajaj Finance from the morning has stayed on number one spot on the Nifty. Dr. Reddy's, Infosys, ICICI Bank, and also HUL and Wipro. These are the top movers. On the downside, Trent, now 11% gone from this one. Tata Steel, Eicher Motors, Tech Mahindra, these are all the stocks that are down in trade. Trent especially has come down after, the muted set of guidance that they have given for the Q1 as well and going forward from here. Remember, they're talking about a 25% CAGR growth that they are looking at, but this is a markdown from about a 35% CAGR that they have seen in the past. And that's why the stock has really been battered today, 11.4% down at 5,487. Tata Steel, Eicher Motors, Tech Mahindra, IndusInd Bank, these are the other top losers. Oil and gas remains the top moving sector. Realty follows. Pharma, IT also follow. In tandem, financial services, banks are higher in trade. But what's lost ground? The broader markets, they've slipped into the red. In fact, underperformed the broad benchmark indices now. Autos and metals have also lost some sheen in trade today. F&O movers, Bosch, BPCL, these are the top movers as far as the F&O space is concerned. Also followed by Indraprastha Gas, Glenmark Pharma, Mankind Pharma, some of those pharma names that are up. Downside, you have Trent, Angel One, KFin Technologies, Concord. These are the stocks that really lost a lot of ground in the kind of moves that we saw as far as the F&O action is concerned. Remember, Concord shares have also crashed almost 19 odd percent, and X trade bonus kind of a move. It's not actually crashed that much, but it's the X bonus trade kind of a move that you're seeing on the stock right now. Let's actually look at the top gainers from the broadest index. You have PC Jeweler, Parswanath, JG Chemicals, you have Imami Paper, Imco Elecon, you have SML Isuzu, you have names like Paras Defense, Surya Lakshmi Cotton, Tourism Finance Corporation, Ventive Hospitality, one of the recently listed ones, McLeod Russell. You also have names like Orient Paper. So the paper stocks are coming back. We will try to look again for these paper stocks in the next week as we go on to trade as well. Final print in front of you, 25,461, 55 points higher on the Nifty. So we end Friday on a positive note, and that's a good part. But remember, what will be more important for the markets to track tonight and tomorrow will be extremely important, because there will be a lot of statements coming in from the US. President Donald Trump already indicating that at least 10 to 12 countries will get their letters tomorrow on how they have to start paying tariffs starting 1st of August. Will India get some sort of a deal announcement over the weekend? If that happens, be prepared for a market move on Monday. Or if we get to see it before July 9th, that will be extremely important. Next week around, we will also start to see earnings expectations and earnings to kickstart later part of the week. And of course, from the next week onwards, we will have thick action on the earnings front. Two big, triggers for July now in the works. Keep an eye out on all of these triggers while we continue to help you understand more about market developments, news from the world of business and finance, even after this show as well. Stay tuned.